Now that financial year has come to an end, most businesses are busy in closing their books, and while focusing on the revenue side and profitability and income tax, that one thing that is being missed is the health check or GST review at the year end, which is actually going to prevent a lot of future litigations for the taxpayer. And to help us decode this, we have with us CA Yash Dhadda, managing partner at Dhadda and Company with over 15 years of experience in indirect taxes. Welcome, sir.
Thanks, Shefali.
To start with, in your view, how critical is year-end GST review? Is it just a compliance, or do you think it's a tool which will, kind of mitigate my litigation in future?
So, Shefali, first we have to understand that generally when we do an year-end closure, and March being that month which is most crucial for all of us who are related to accountancy and taxation, we have to understand this, that in GST, any question which is being asked by department, that is being asked after at least 2 years or 3 years, and they have a timeline of going up to next 5 years. So what I am doing in current financial year, the question in respect to that will come in after 2 years. Let's say if we are sitting in 2026, probably the question will come in 28, 29, 30. So at that point of time, I cannot undo whatever has been done. So as we always say that prevention is better than cure. So this is that preventive time where I ensure I take care of it, and that's why we call it as a health check. I do a health check of me. I see to it, are there any areas which can be a pain point for me in the times to come? There are some things which within the time limit, can I cure all of them? So that the term which you use, which is litigation, which is unfortunately very costly in GST, can I minimize that cost? And that's the whole point of doing an year-end adjustment closure of books of account. So it's not only filing a return which we are taking care of, that my March return has to be ensured that it is proper, but what I'm really looking at it is that on the basis of whatever has happened in last 8-9 years in GST, now I'm aware of that department can ask all these questions, and do I have necessary answers to them?
From a year-end perspective, what are the non-negotiable checks that business can undertake relating to ITC? So that again, they do not have over availment or short availment of ITC, or to avoid any future litigation.
Correct. So we can break this into 3-4 small parts. One is obviously availability of all the documents. That's the first thing which I have to ensure, especially in today's time. We all know that we do matching on a monthly basis. Yeah. So 2B, 3B consumes majority of our time while we do a monthly filing. But year end is the right time where I see to it that there is one more condition, that I should actually have a really tax paying document or a tax invoice or a debit note basis which I have claimed input tax credit, and it should be available with me. So are they really available with me? That's point number one which we have to ensure. Second is in respect of block credits. So block credits, again, what we do is that we have checks in our system. Basis those checks, when a specific type of a transaction at the expense side booked in my books of account, if my system flags it as blocked, then it is blocked and I do not claim the credit. But it is based on the past experience, it is based on the past history. Year end is that point of time when I really look at it, go back to my books of account, look at expense side, see to it if my block list has been updated in the last budget. Is there any change in this?
Yeah.
Have I undertaken any new transaction at my expense side which can probably be treated as blocked? Have I undertaken any employee related perquisite transaction which probably I was not aware of, or I treated this as unblocked? At that point of time I claim the credit and I should claim it. So that block credit updation is important for the future periods and also for what has happened in the previous part. Third, I see to it specifically if I have undertaken any transaction this year on which I did not pay any tax and it was exempted, it was nil rated, it was non-GST supply. So, well, I did not pay tax at my outward side, I was happy that I did not have to shell out tax on the outward revenue which I earned. But did I reverse or give the benefit of the input tax credit which was available to me by way of a reversal? So that reversal exercise March is a perfect time where I do that, because if I do it afterwards, government will ask me to actually pay interest. So I can save my interest cost also in this regard. Fourth, specifically if I have multi-state registration, ISD as a mechanism, which is input service distributor, I need to really look at it and go back to it, because ISD mechanism says then you see on the basis of your previous turnovers. So earlier whatever distribution I was doing, that distribution I was doing on the basis of a previous year or previous quarter turnover. Now at the year end I go back and I see, have I really booked my ISD properly? Because 25-26 financial year was the first year in respect of ISD. So that review this year in respect of ISD becomes most crucial. So these are at least those 4 types of checks which are in my control, not dependent on the vendor, only dependent on me, and I should see to it at the year end that whether check marks in respect of them are there or not.
You just discussed about the things which were in my control, which was not controlled by vendor. But we've seen in the recent times that a lot of my ITC get affected because of my vendors.
Right.
So how do I manage these vendor related risk areas?
Correct.
Where my ITC is being affected?
Right. So again, in the previous part we discussed what is in my control. But you're right, in GST, input tax credit is completely not in my control. I am actually dependent upon his monthly return compliances, my supplier's monthly return compliances, and whether my supplier has paid the tax or not. And third, whether he has paid the tax correctly or not. All 3 of them actually affect my right to claim input tax credit, and this whole GST is based on that benefit of input tax credit which is available to me. So what I really need to check, on a monthly basis I do not see whether my supplier has filed 3B or not. But there is a rule which specifically says if my supplier is not filing 3B, then I cannot claim input tax credit even if it is appearing in my GSTR 2B.
Right.
So year end is that point where I recheck it, I see to it that he has filed his 3B. If not, I push him, I force him to file 3B. Otherwise, I see to it what contractual restrictions I can put on him. So that's one thing to check. Second, I ensure that whatever tax is there on the invoice which he has charged to me, same tax is appearing in my GSTR 2B. Not only in terms of numbers, but also in terms of classification. CGST, SGST, IGST, are they in synchronization, what is there on the invoice and what is there on the portal. Not only this, but also place of supply. At majority of the times what we see, that a supplier, let's say sitting outside my state, is charging IGST to me, but he is not putting place of supply as my state, he is putting place of supply as some another state. That becomes unnecessary issue point later where a notice is issued to me which cannot be corrected. So this becomes the right time where a correction can be done. Fourth, generally invoice number is something which we ignore. We match the values, we see the tax is proper or not, and basis that we proceed further. But if there is a difference in the invoice number, generally in departmental audits what we see is they raise this as a point. They say invoice number which is there in your purchase register is not matching which is there in your GSTR 2B. And again, this is that right time where we communicate to the vendor. Vendor makes the necessary correction because he will have next 6 months to make all these corrections. So these are 3-4 things in terms of vendor management which I can see at the year end. Mind you, we have IMS also now which is in place, and IMS came in this year in a halfway mark only. So whether I was really prepared for my IMS, how did I take care of my IMS, how did I record the supplier's credit note in my books of account, this is also that point where I see to it that that necessary corrective action has been taken or not.
Additionally, how do businesses ensure any reverse charge liability at the year end, like while closing their books, because that again will trigger interest liability if it's delayed or not paid during the year.
Correct.
So what is to be done?
In fact, not only interest liability, reverse charge is a mechanism we all know is revenue neutral exercise.
Right.
Rather than paying tax to my supplier, government is telling me that I have to pay tax directly to government, and then I can claim input tax credit if I am eligible to do so. Sometimes this miss, which as of now is not, that non-compliance as of now, I believe what has happened, I was supposed to pay 100 rupees to the government and claim it back from the government. So it's zero. But today it is zero. If after 1 year I realize that I did not pay 100 rupees to the government, then at that point of time the government would come back to me and tell me, you had to pay 100, you pay 100, but because you missed the bus to claim the credit of that 100, so we will not allow you that credit of 100, and suddenly it becomes a cost of 100. So reverse charge as a compliance is very important, because if I am not checking it at this point of time, my revenue neutral transaction is unnecessarily becoming a pain point, and it can convert into a cost. Now in respect to reverse charge also, it is similar to that of a block credit treatment, not in terms of the costing side of it, but how do we procedurally take care of it. We pre-identify the expenses, we pre-identify the vendors, and we have a system check generally where we say that whether reverse charge is applicable or not. And again, year end is that exercise where I go back to the drawing board, see the reverse charge notification, see if there is a change in the reverse charge notification or not, and then look at my transactions if I have undertaken any new transaction with a new supplier. Whether the supplier has not charged any tax, all those points should be a flag point for me. Why supplier is not charging a tax? Whether this transaction is exempted, or he believes that its services are taxable under reverse charge or not. Transportation is the best case scenario for this, where we understand this. Security is the best case scenario, where in case of a security, whether supplier is a body corporate or non-body corporate would determine whether reverse charge is applicable or not. Transaction with the directors, whether my director was an employed director or a non-employed director will determine whether reverse charge is applicable or not. Did I take a new premise on rent during this year? If it was a commercial premise or a residential premise and supplier did not charge a tax, then it should obviously raise questions. Did I make any payment to a government which was not a tax payment to the government? I made a fees payment to the government. I made a payment in respect of a certain registration. Whether that is exempted, not exempted. So these are all those points, these are all those areas where I would at an year end should look at it, see my reverse charge list and decide should I pay the tax or not. It is also important to note that year end is that point where I see that in respect of reverse charge, I am not only paying tax, but I am making a document also to claim input tax credit. And this is something which is missed generally. So when a department questions, then we realize, oh, I have not prepared a reverse charge document and I have to give it to them. This is the time where we correct this and put this on record.
Now coming to the outward side, where the tax is actually payable, right? So one obvious exercise is that I reconcile my books with the returns. That's obvious, that everybody is doing. But now what is happening is there are different GST portals, not GST portals, different portals, government portals. One is GST portal where I'm filing returns, then there is e-invoice portal where I'm doing e-invoice, and then there is e-waybill portal where the movement of goods is being tracked. Now with these different portals, how does a taxpayer maintain consistency across these portals? Because any inconsistency amongst these would trigger notices, right? So how do I ensure, and if let's say I identify something, how do I rectify it?
Correct. So again, on a monthly compliance basis, the reconciliation which we do actually impacts my liability. And that's why we are vigilant about it. The other portals which you refer to, it may not be impacting my liability instantly, but it is creating a warehouse with the government authorities where they can question the authenticity of the document or the transaction which I have undertaken. Like for example, on the e-waybill portal, which you rightly mentioned, there is a data compilation of data which is available that how many e-waybills I have issued for my outward supplies and on what document type. Now I have that data of that document type on my GSTR1 portal also. That data is available on a click of a button to the departmental officer. I never cared to reconcile that because my e-waybill was generated by the dispatch team. And my tax invoice is prepared by my accounts team, and my GST return is filed by my tax team. So there are three different teams who are taking care of it and they are not integrated. So the year end is that point of time where I bring all of them together. I see to it what errors have been done by my dispatch team in respect of e-way bills. Errors done in respect of an accounting team is generally taken care by the tax team while they are filing their GST R1. But when I merge all of these things together, then I come to a point that there are differences. Now those differences I can rectify. If that error is on a e-way bill portal, unfortunately I cannot rectify that because there is no provision beyond 24 hours to actually make changes in my e-way bill data. But if there is a miss where I have prepared an e-way bill, dispatch has happened but invoice is not prepared, I can really take care of it. If there is some intimation that needs to be given to the government that my e-way bill data was incorrect or there is an error in generation of it, I should ensure immediately at the year end I write a letter to my jurisdictional officer. Why am I saying this? There is a provision in the law, especially in section 126, which says that if there is any non-compliance, but if the taxpayer is coming forward and disclosing it to the government, then penalty would be reduced or it would not be applicable depending upon if that communication has been done or not. That philosophy would be applicable not only in respect of penalty, but it would be applicable in respect of other proceedings also. Then department would not look at this transaction with a point of view of saying that you have deliberately not disclosed any information to us. So this needs to be taken care of. You said only in respect of all these portals which are related to GST hemisphere. We have income tax also which is important.
Right.
I have 26 AS which is important. I have AIS reports which is important. I have data which I am preparing at the year end for my 3CD which is important. I have a related party disclosure which I am doing in my balance sheet and my Caro reporting which is important. All of those things are available on government portal. So answer to all of this is that reconciliation needs to be done. If you are registered in Rajasthan, then you have one facility which is there. There is a government portal available from the Rajasthan government side where you can get yourself registered and you can get the data or types of report which are being generated on the taxpayer's office, tax department office. You can see to it that what data is there, what mismatches are there, so at least you can preempt and notice there. For other things, that reconciliation which you do, you should do it from a point of view that your departmental audit will be done after 2 years and there what answers you will give. So that will kind of give a clear picture.
Okay, you just mentioned a portal where all this different reports are available. What is that portal?
That CTD portal is there.
Okay.
You go there on the basis of your individual Aadhaar number. You can get yourself login.
Okay.
And then basis that it has other departments of Rajasthan government also which are listed there. There from that you go to state GST tab only, and there year wise you'll be able to actually look at all the data which is available.
During year end, we recognize any revenue based on the Ind AS, like as per the Ind AS norms, based on risk and reward transfer. But in GST we do not do that, right? In GST what we do is we charge tax before removal of goods or on the basis of time of supply provisions. Now if we see, then there is gap between these two, which is to be addressed. So how do taxpayers address this major gap between the two verticals?
So generally year end is that period where there would be a problem reporting issue, because during the course of year ultimately the timing gap would reconcile in that particular year only. Ind AS as a concept, not in fact only Ind AS, we'll have Indian accounting standards also which would be applicable. In some cases IFRS would also be applicable. So all of them have their standards based on accounting principles.
Right.
Whereas tax liability under GST is not based only on an accounting principle, but it is based where at the earliest possible instance, how can revenue ensure and safeguard that it's tax collection. That's why they say even before removal you can prepare your tax invoice. So the answer is preparation of a tax invoice would trigger a liability in my returns and I would have to pay tax. But whether I am showing that as my sale in my books of account would not impact my GST liability. So that understanding has to be very clear. So what is that reconciliation at the year end that needs to be done? We generally have a terminology, we call it as a goods in transit. Goods in transit are those goods where I might have prepared a tax invoice, but I would recognize my sale based on the accounting principles or the accounting standards. Okay. Those accounting standards specifically in respect of goods are dependent upon the fact that what are my Incoterms, whether I have to make an ex-factory sale, whether I have to make a FOR sale. So that would determine when I would record my sale. But my GST liability is very clear, it's on an invoice. So that gap would be there. My books of account turnover would be little lesser at the year end, because my sale would eventually be recorded in the next year based on when delivery is taking place in case of FOR sales. But my GST turnover would be slightly higher. That's one. In respect of services, situation becomes a little more complicated. We have a concept of unbilled revenue. Now, unbilled revenue is again an accounting provision. That's based on a matching concept.
Right.
I have an income again, I have an expense against that, whether I am recording, making a provision of income or not. But again, GST is not on a matching concept. We don't claim credit only when I am paying tax to the government. So there, that unbilled reconciliation with my GST liability in respect of services sometimes creates an issue. So I have to be very clear that whatever unbilled I am making, on what principle I am making it, and how am I reversing my unbilled. If my unbilled is based on an expense, then I need not reconcile this, and I have to disclose that in my books of account. But if my unbilled is based on that billing which I am going to do in future, then in that case I have to ensure that billing is done in accordance with GST provisions. So that's the gap at the year end. We need to identify on what basis I have done that unbilled provision in respect of services.
Right. So we've seen in real estate sector that they recognize revenue based on percentage of
Completion method.
And then here in GST, it's totally different. Like
Yes,
in 1 year they may have sale, but in GST they have nothing.
Correct.
Not any liability, which will occur in future years. So there they have a major gap.
Because in GST we have section 32(5) for continuous supply of services.
Right.
So either it is milestone based, or it is timing based, or it is receipt based. So that depends on my contractual liability.
Right.
Whereas my accounting standards, which tells me to do a percentage completion method, it's on the basis of whatever cost I have incurred. So that's the gap here.
Yes.
So that gap would always be there. The important part is how are we documenting it.
Right.
Because that
is
gap will
only
always
going
be
to
there.
happen. Yes.
Yes.
Let's say I have raised a credit note on my recipient. Now there's a condition in law that when I have raised the credit note, the other person must have reversed the credit. But again, this is beyond my control whether the person has reversed the credit or not. So again, at year end, how do I ensure for all those credit notes that have been raised in the gone year, the ITC has been reversed?
Take a manual declaration, as simple as that. First, either they should have followed IMS, but if they have not followed IMS, now you cannot tell them to follow IMS for the invoice which I have raised during the year, because the mechanism in the law is still evolving. Though we have changes in the provisions of the Act, but still at the ground level that clarity is not there. It's very simple. Make this moment of year end while taking a balance confirmation, take a separate declaration that they have either not recorded the invoice in the books of account and hence not claimed the credit, or if they had claimed the invoice, then they've also recorded the credit note and they reversed the credit. Just that credit is appearing in my GSTR 2B, I would not be able to substantiate my case that my recipient might have reversed the credit. It's not a law does not say it, he might have reversed the credit. Law says you have to ensure that you have reversed the credit. So year end is that point where you take that necessary declaration, at least discharge your onus.
Okay. And in future, shall I ask my taxpayers to follow IMS and accept my credit note so that it's...
And we discussed this earlier also,
yes,
that if I am telling my recipient to actually accept, reject an IMS, then that recipient has to do it for everybody else. So that's for the times to come. There is that IMS implementation would be there, but up till now, till the time it is not there, I can take the manual declaration.
From over 15 years of your experience in IDT, what are those common overlooked areas which invite notices or any further disputes?
Well, generally from a compliance point of view, Shefali, what we understand that monthly compliance more or less has become settled, and that's where taxpayer take care of it. It's only that quality of a transaction and necessary authenticity of it, that kind of become that a taxpayer may be ignorant towards it. I may not say ignorant may not be the correct word, but they're not aware of it, that how do I have to ensure that quality of my transaction I'll be able to explain to the tax officer. So tomorrow a tax officer comes and he says that whatever GST rate you are charging, I am not satisfied with it. Then I cannot take an argument by saying since last 10 years I have been doing this. I need to have a solid argument to say that this is the rate entry. In this rate entry, this is the wordings which are there and this is the necessary evidence which I have. So every year end, what we suggest to the clients is that specifically, if you are in that scheme where you're not following a standard GST rate, but either if you're on a subsidized rate or your product may fall in the highest rate, see to it that you are year end reviewing that is there any change in the law, is there a new ruling which has come, is there a change in your packaging, is there anything which new declaration which you have given, and document all of that. Because classification disputes, they hit your top line, and they hit your top line for last 5 years with including penalty also. And generally classification disputes goes to the highest forum for decision making, because it's an interpretational issue.
Right.
Similarly, in respect of valuation also, what we see that generally if it's a straightforward transaction, there is no problem. But in industries where barter is very common, those industries where discounts are very common, those industries where I want to give incentive, but that incentive is given in a manner which is not on the invoice, or let's say where I am working with the contractors and I am making available certain goods to them. In all these cases, these are all transactions which are beyond my books of account. I would not record them in my books of account. And I would be confident that my books are absolutely clean. But GST is not only what is there in your balance sheet and profit and loss account. It's more on what is the crux of the transaction. And third and last, we always say, and in fact now courts have also said that GST is subspecies of an enforceable contract. Contract meaning thereby, do I have a document? So if let's say I am doing a podcast, and is it really it's a time sharing adjustment, or it's a service which I am giving to you? Am I writing that? So the most important part in GST is how am I contract worded? Have I made any changes in this? That wording of a contract is pushing any liability on my recipient? Or am I really sure that whatever I am doing in reality on the ground, I have put that on a piece of paper? Because when government would ask it, they would first look at the paper and then they would believe whatever is written on the paper is right, whatever you are doing is not right, which is actually vice versa. So your paper should be in sync with what you are actually doing in reality. These are three areas where I believe that majority of the issues which are there in indirect taxes, they germinate because we are only looking at our books of account, but there are things beyond books of account which are relevant.
So this requires vetting of all the agreements and contracts.
Correct.
From GST perspective also.
Correct. And to have agreements and contracts maybe in a simplified form if they are not in place.
Right. As we move forward in FY 26-27, what are the main compliances that taxpayers shall ensure so that this year can go smooth?
Correct. So this year first, IMS, treat this as non-negotiable. At least start with this. Get your teams ready with this. It will require change in the philosophy and the manner in which you do your monthly compliances. It will not only impact your GST compliances, but it will impact the manner in which you do your business. That's point number one. Number two, declarations. There are a lot of provisions in the Act which require you to actually file declaration at the year starting. Like for example, if you're an exporter of goods or services, you have to file letter of undertaking on the GST portal. Ensure you do that before doing your exports. If you are a transporter, see to it whether you are filing your declaration, whether you want to opt in for 12% or 5% or under reverse charge. If you are under composition scheme, you want to opt out of the composition scheme, do that. If you want to opt in into composition scheme, you do that. Then there are your invoicing series. Do you want to start with a new series? You want to continue with your own series or the earlier series? That you have to see to it. Fourth, you have to check that whatever parameters you had set to identify your reverse charge transactions, to identify your block credits, to identify those credits which you are not going to take. Have you really relooked to them? Have you put in new parameters, new checks which are already in place? Fifth, if any previous audit has happened, if any previous notice has happened, and you have identified that there was a certain lapse on which you paid amount and got rid of it, have you incorporated that into system or not? Sixth, have you really relooked at your transactions contracts? Have you ensured that you're putting liability on the vendor for his non-compliance? Because even if your vendor may be a best person to supply goods and service, but if he is not a tax compliant vendor, he is making those goods and services 18% costly for you. So are you ensuring that he is putting his GST compliance within his domain and is putting that cost on him and not taking it on you? These are all those things at the year starting which we can ensure, we can see to it that I'm starting with rightly with this. And lastly, I always believe that if you are a business which is a growing business, you have one consultant in place who at least tells you on a regular basis that what are the changes which are taking place.
Right.
GST is still evolving, it will continue to evolve, it will at least take next 4-5 years to settle down. So in these changing times, you have to see to it that your cost at the indirect tax side of it, which is again, I'm repeating, it is at your turnover, not on your profit. It will not eat up your profit if tomorrow a litigation comes in.
Thank you, sir. So what we understand is that this year-end GST review is not just a compliance, it's an overall health check of your business, which is actually going to prevent any future liabilities for you in the business. So thank you so much, sir.
Thank you, Shefali.
So thank you for tuning with us till the end.